Hi, it's Paul McFadden here. So let's talk about the 5 different ways to buy property with none of your own money. So this is one of the most common questions I get, if not the most asked question. Paul, can you get started in property with none of your own money? If so, how do I do it? So this is what I'm going to break down and discuss in this video. So my own personal experience is that when I get started in property at a young age, I get started quite young, at 19, I had no money. I had no knowledge, no contacts, no resources, but I never chose to focus on the lack of. I chose to be resourceful. The seed was planted for me to want to do better in life and to make money, and I saw property as that vehicle to do so. So for me, I had to get out there and look at other ways to get involved in property when I never had any money. Hey, my credit was even poor as well. So I had everything going against me. I had all the reasons, every single reason that normally holds people back from getting started. I had all of those reasons. But as you say, you either have reasons or results. So for some crazy reason, I was hungry and motivated to go out there and seek the right knowledge and see what creative ways I could structure property deals so I never had to use any more money. So I'm going to talk about the 5 different ways. Now, the first one is the one that most people have heard of, is use other people's money. Now, in property, you hear a term that gets used all the time, which is a joint venture, a JV. So you can joint venture with other people. I mean, let's think about it. If you are presentable, if you hold yourself well, if you can go out there and source the right property investment, the right deal, you'll have people out there that want to partner with you and they will bring the money to the table. So for me, my mindset was always, I'd rather have 50% of something than 100% of nothing. All right. So you've got to adopt that. The truth of the matter is, when you have choices and options, the longer you're in this property game, the more that you start to get involved and build up a portfolio and you do some property developments and you become known, and you'll have more options in the sense of you don't need to give 50% of the profits away. But in the early days, for me anyway, I was happy to joint venture with someone. I could quite easily find the right property deals, present it to an investor, they would bring in the monies required to buy the property, and we would share 50% of the revenue, the income generated from the property. And if we choose to sell, we split that profit as well. So win-win. I bring the deal, they bring the finance, and we partner up. So you can structure deals like that as well. So this is using other people's money. So how do you attract these people and how do you find them? Well, rather than thinking about where do I look, the first thing you should do is look within. Who do you need to become to be someone worth getting investment in? And the first thing I recommend you do, there's many things that we discuss this in our Protege programs and who you need to become, and we dig deep to really help you there. But the key thing is that you need to get the right knowledge. If you have the right knowledge and understanding what the right property deal is, where to source a property, how to structure it, how to make sure you do the due diligence to make sure you're going to make money, how you structure all of that kind of stuff, that there has got value. So if you've got that knowledge, people will want to invest in you, especially if you can find the deals. So keep that in mind. So the first one is using other people's money, joint venturing with other people. The second one is private investment. This is not normally just other people's money. It's a form of other people's money, but it's not just an individual investor. It could be, again, going out there and finding someone who will invest in you for an annual return. So let's say, if someone who has their money in the bank, what are they actually getting money in their bank just now? They're getting probably 2% if they're lucky. That's probably if they've got a good ISA. But the fact is that we can show other people like that. This is non-sophisticated investors. We can show people that they're losing money having money sat in a pension, that they should release equity for their own home so they can invest and get a higher return. We need to give them options, and you understanding the different methods of doing that with the right knowledge, you can present to them how you could take their £50,000, £100,000, and you can go and invest it on their behalf and give them anywhere from a 6 to 10% return on their money. So you're using other investments, private investment money, not just to go in on a one deal like you would as other people's money in a 50-50 partnership. You're taking a lump sum of money for you to go and build a portfolio that generates more than the return that you need to pay the investor and give yourself a profit as well. Or you can go and buy, add value and sell property and what you're doing is you repay that private investor at the end of year one, or whatever the length of term agreement that it is that you take with them. And when you do that, what ends up happening is you have all those options and choices to, pay back the investor and have built that pot of cash for you then to go and start investing with your own money that you've built up by using other people's money. So that's private investment. So private investment is good because what you're technically doing with that there is you're really just using, someone's money for a 12-month period, and you can do as many deals as you want inside that time frame, rather than just doing one individual as a 50-50 joint venture. Now, the third one here is how you structure the deal. So there's non-traditional lenders. Most people think of high street traditional banks that will lend you, and they look for a deposit. But there's other commercial lenders out there that don't require a deposit. They will fund you 100% of the purchase based on you buying the property at the right price, normally at a discount, but more importantly, understanding that you can add value to that property by doing a renovation. Now, if you have a track record, or you've done at least one or two, and if you haven't got a track record or haven't done one or two properties, then partner up with someone who has, and you'll have commercial lenders who will line up to give you 100% funding to purchase the property and the development finance to renovate the property, refurb it, and put it back on the market. And providing you find the right deal, structure the deal in the right manner, you don't need to put any of your money down. You're using non-traditional lenders, commercial lenders, to fully fund your project, and they still get paid and you still make the money as well. Now, the fourth is, in property, there's lots of different strategies. And one of the strategies is options. Now, options allows you to control property, and then you can benefit from it all without having to put deposits down. You're really leveraging the person who already owns the asset. You're leveraging their ability to, have a mortgage and service the debt, but you're taking that over. You're agreeing to buy that property sometime in the future as an option to buy, not the obligation. But you benefit from taking that property, adding value if you choose to, but more importantly, being able to take that property and then go and maximise the rental income from that, which then further, helps you build up the cash that you could use for yourself to maybe go full-time in this property game, or maybe build up your own cash pot to go and buy property using your own money, whatever you may want to do. But if you get so good at raising finance and using these other methods of buying property with none of your own money, you'll probably just spend your own money and continue to invest it that way rather than, using your own money to buy property. And the fifth way is trade property. So you're never taking ownership of property. So what you're doing is you're going out there securing a property deal and you're going to move it on. And the average that our students sell property deals for is £7,500. Now think about it, that's the average. So if you were doing one of these a month or one of these every other month, £7,500 per property trade. And this is deals that you're not buying yourself. You're not putting the deposit down. You're not putting the renovation money down. You're putting nothing down other than sourcing the property and selling it on. My first property deal that I ever done was a property trade when I made £1,000. I had no idea what I was doing. I thought I was charging too much, but I've learned a thing or two over the last 10 plus years that we can show our students how they can take the same type of deals and make £7,500 plus by trading property. And by doing that, you make significant cash flow. You learn the ropes of this property game inside out. You're going to build up that investor list, the contacts. You're going to grow your network. You're going to be able to cherry pick the best deals to add to your portfolio, cherry pick the best deals to flip, and the rest, the majority of the deals, you'll trade on for strong cash flow. And when you start to understand that and see the different options that's available to you from other people's money, from joint ventures, from private investment where someone's giving you money for access to, you pay them a percentage return, you can go and do multiple deals, from structuring the deal in the right manner with commercial lending, from doing different options to control property and still benefit from it without putting money down. And the last one is trading property, build up cash flow. That's going to give you options and choices to decide what you want to do with things as you start to build wealth through this property. So this is 5 different ways now to buy property using none of your own money. Use these, go out there and apply those. And if you're looking for the education and knowledge on how to find the deals, how to structure things, how to go into deeper levels to do this, have the confidence along with the support, then check out our program, propertyprotege.com, for more info on that. We cover all of the different routes, and here we even cover the 20 multiple different ways to have cash extraction, get money out that you can go and apply these and get money as soon as next week by doing the different unconventional ways of raising finance and pulling money out that you can go and invest in property. So again, I hope you enjoyed this video and I look forward to speaking to you again soon. Bye for now.